Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bearish scenario where we're looking for a 5-wave impulsive structure to the downside, where wave 4 is finished right inside the common target area for a wave 4, which is the 382 and 05, hitting that daily naked point of control that we were looking for such a long time, and then we are looking for an impulse to the downside in a wave 5. Now the common target area for a wave 5 can be seen on the chart, the 1.236 to the 1.618 Fibonacci taken from the low of 3 to the end of wave 4, sitting between 40.9k and 40.1k, and at 40.1k we also have the lows over here, low 1, low 2, low 3. This is the lowest low, which is interesting for liquidity. However, of course, important with the wave 5 is an internal 5-wave structure, because wave 5 has to be an impulse. So if price moves to the downside impulsively, we are of course then looking for a wave 3 in this particular scenario, but wave 3s can be very extended. If we are looking for wave 5 to end in this box, we need to see a little bit of a range before, preferably then, taking the low. So you want to see a 1, 2, 3, sideways 4, that takes a bit of time, then a 5, wick the lows, close above and continue to the upside. If price is going to go down in a straight line, immediately wicking the lows over here, we might see a bit of a reaction, but probabilities are then higher to move towards the downside, where we have the yellow support box over here between 38.6k and 39k, and below that we're looking for support in the blue area here between 37.7k and 36.4k. You can see that wave 4 ended before the 5 pip time, which is a little different compared to the previous video. This is of course what you like to see, but the main difference for this is the pull that I've done over here between the wave 1 and 2, because the pip time is taken from the low of 1 to the end of 2 to the low of wave 3. On the 15-minute, you can choose 2 pivots for the end of the wave 1, the one on the right over here or the one on the left. However, when zooming into the very local time frames here, probabilities are higher that this is a corrective low, not an impulsive low, meaning the probabilities are higher. This is the end of your wave 1, and because that is now selected as the end of wave 1, it therefore puts this 5 pip time behind the high of wave 4, which is then also what you like to see. Now the invalidation for this impulse is if price moves to the upside to the 0.618 at 44.4k. If we then look at the bullish scenario, but also a bearish one, which is the pink count, then we have this scenario over here. We're in the bullish count looking for a flat structure in a wave A, B, C, where C is in, and we're looking for a move to the upside, where this is then a diagonal in a wave 1. We're looking for a 2 and then a wave 3 to the upside. Of course, in this scenario, we are looking for a 3-wave structure in a wave 2. We want to see proof of support and then price moving to the upside. If price is going to just do this and constantly form bearish CVD divergences on the lower time frames, which I'll show you in a second, that is of course not what we like to see regarding proof of support. But in this scenario, if this is the end of C, you want to see a 1, 2 and eventually a wave 3 to the upside, taking out this high, invalidating the bearish scenarios on my chart. Talking about these bearish scenarios, we're looking for either an impulse or an ABC, where this move down is now a wave 1 or a wave A, followed by a wave 2 or B, C or 3. Common target for B is the 382 to the 886. Common target for 2 is the 05 to the 786, giving you a total area between 44.4k and 48.1k. Now currently you see that price retraced to the 0.236. This is a rare target for 2 or B, very uncommon for a 2 or B to retrace to that target. So in this scenario we would expect price to move towards the upside, either then in an A, B, C to the upside and then a continuation to the downside, or in a flat scenario where this is a 3-wave A looking for a 3-wave B and then a 5-wave C to the upside. In this case you then also take the low over here, which is the invalidation for the bullish scenario, the flat here, and continuation to the upside, as it then increases probabilities for lower prices to come at a later stage. If we zoom into this range, this is the flat scenario, which was the dotted line on the chart just now, where you then move up, want to see a 3-wave move down, and then you get an impulse to the upside. In this particular scenario, the common target for B is between the 1.236 and the 1.38, taken from the low to the high of A, sitting between 40.9k and 40.6k, which is also close to the lows that I've been talking about earlier. Now wave B is most commonly a zigzag structure, so we definitely want to see a 5-3-5 zigzag structure that also follows the rules of a zigzag. After this wave B, we then look for an impulsive structure to the upside where we then want to see the higher retracement targets as I've shown here earlier. Now the probabilities are high that if you move above this high over here, you're going to fill the gap that we have on the daily to about 45.5k, 46k, and we also have a target box over here which is sitting between 45.9k and 46.7k. If we then look at this bullish scenario here, we are looking at a diagonal to the upside. So we have a 1, 2, 3, 4, 5, and in this scenario we are not taking the low, so that is the big difference. After this wave 1 or A, we are then looking for a corrective structure to the downside in a wave 2 or a wave B. We want to see a 3-wave structure either in a flat here or a potential zigzag, where eventually we're looking for a move towards the upside. So we want to see some proof of support in this area over here. The most common target for B again between the 886 and the 382. We have already hit the 382 and almost touched the 0.5 here. And the most common target for wave 2 is between the 05 and the 786. And then we are looking for either a wave C to the upside, which then results of course in a bearish scenario as we still expect more downside, or a wave 3 to the upside, but that is something we have to wait and see. If we look at this range over here, then we have been ranging here for already a long time, of course, and after hitting that daily naked point of control at the high, price has been grinding to the downside here around that point of control and currently at the value area low. We have a little bit of support in the range, which is the white box down here in case price does move down between 41.9k and 42k. If we look at these CVD divergences, then this has been the repeating story during this move towards the downside. Each little bounce that we had was countered with CVD divergences, absorption of market longs with limit shorts, pushing price to the downside consistently. And now over here, we just took this low, so the latest bearish CVD divergence has also played out, as you can see. On the CVD chart, it looks like this. This is the 15-minute chart, and you can see here the latest one where we had a lower high on price, higher high on the yellow CVD, and also on the blue CVD. And as it stands, there is no bullish CVDs over here, and that is definitely something that I would like to see to observe some proof of support. Even if we don't have bullish CVDs here, then I want to see it more locally, get a solid move up and a retracement, so bull CVD, because if we keep countering the price action with bearish CVD divergences, the probabilities increase to move to the downside and take the lows. And if we then look at the probabilities of the different scenarios, then locally the highest probability was bearish. I was looking for this little low to be taken because of the 5/15 minute bearish CVD divergences. This has now happened while recording, so now we observe the reaction and see if we get some proof of support for a continuation up, and if not, we're going to look for a continuation to the downside. And on the low time frame, the probabilities at the moment are neutral. It remains very difficult for me to count this high as the end of a bigger corrective structure over here, which generally would then support this probabilities for price to move to the upside. Of course, here I have then the ABC, WXY, WXYXZ on the chart, but it remains very difficult to end something there. However, at the same time, on some charts, this low touched an 886, which of course increases probabilities a bit for a double bottom and the lows to be taken. On Femex, this low has already been taken. Diagonal is taking a while, so there's a bit of counter signs on the chart, and I prefer to remain patient because of it. If price, however, takes the high, then it has the possibility to fill the daily gap that I showed in the previous video to about 45 to 46k over here, right, where we also have the target box above price. And if price is going to move towards the downside on volume, we have to be aware of a potential wave 5, where this is 4 and we look for a wave 5 to the downside. If we are looking for a wave B to the downside in an ABC, we want to see a 3-wave structure, preferably in a zigzag, so we keep our eyes open, of course. And if we're looking for a wave 2 or a wave B, then a flat here is an option for continuation. We want to see the high taken, or we want to see a bigger 3-wave structure. But most importantly, we want to see some local actual proof of support and not every bounce being countered by bearish CVD divergences. So far yet we don't have proof. We have a bit of a wick, but we continue to observe the reaction over here. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.